Rogier, thanks very much for joining us. It would be good to get your sense, I suppose, on some of the macro drivers, the interest rates, how you're seeing that, particularly from the financing side as well.
Obviously, the interest rate is the most important driver in our market, and everyone is, of course, waiting for interest rates to fall, which might happen, but perhaps not in the same tempo as people might expect. What we see is that inflation is the absolute priority of central banks, and rates will not fall until inflation is under control. And we also saw in the statistics of Schroders, in fact, that also the perception of the market is already a little bit delayed in terms of the interest fall. So it may come later than expected, and that will have an impact on the market, of course. In the end, interest will probably fall, that is what everyone expects, but later in the year. So also recovery would be probably at the end of the year. Another aspect to interest rates at the moment is that the swap rates are currently already anticipating on a fall of the deposit rates. Which means that a fall of the deposit rates does not necessarily mean that the swap rates, which are the most important driver of our market, will fall as well. So we will have, yes, the short-term interest will go down. The mid-term interest will probably remain stable for a while.
Really interesting to catch up on the market. Thanks very much for joining us, Rogier.
You're welcome.